All right, good morning, everybody. So the base case yesterday was that we were waiting on NVIDIA, and that continues into today. So if you like yesterday's trading, you'll love today because it's supposed to be more of the same. There is a little asterisk to that little caveat we'll get into. It's always possible that these sort of situations where we're supposed to be range bound waiting on something which generates a lack of liquidity, actually triggers a really big move because of the lack of liquidity. So it is possible. It's just not likely, right? That's the main takeaway. It's possible. It's just not likely. So markets are sitting and waiting because it's a really big deal. NVIDIA, it has become the global standard. It is huge, the biggest company, has the most weight, and it is connected to the most different thematic plays. So what happens to NVIDIA happens to the world. If they disappoint, we're going to feel it in everything. And if they, can just hold the line with some warm water, things will be okay. If they just blow it out of the park, we'll continue to advance to the upside. Everything right now is based on what happens next in NVIDIA, and that's why we're seeing the entire market hold its breath and wait on NVIDIA's earnings. Right now, nothing else matters. That's pretty sad, but that's just the way that it is. China's up 0.5%. Small caps basically flat. The Dow down the most at 0.25%, which really isn't much, all things considered. Japan down 0.25%. UK down 0.5%, and then Europe at 0.75%. A little odd duck sticking out there. Canada down 1.5%. These confidence surveys, it's not really much to focus on. Maybe something happens at 10. I wouldn't expect it. Right? We don't want to discount data and say that it doesn't matter. It's just likely not going to matter as much, right? And it'll get ignored unless it comes in just way off the rails. Yeah, we are seeing the long end of the curve adjust to the forward guidance given by Powell last week. Today's SPX gamma flip point 63.80. We closed at 64.44 in the SPX. So we're above that, a good 64 points ish. A little napkin math there. This sounds right. So the growth uh, bubble or the growth scare is on pause a little bit. Saw some value kicking in. Lots of M&A deals yesterday, and so far this morning we've got a continuation of the same, right? I was listening yesterday because I had plenty of time to listen to the radio. I was away from the office and I couldn't participate. I heard them talking about the deadline coming up, right? When it comes to companies trying to get M&A deals done, how this administration is different when it comes to, big companies trying to get mergers, acquisitions, whatever. The previous administration would just flat out say, no, we're not going to let you do that. Done. The conversation was over. With this administration, if there's something wrong with the deal, they'll say, no, you can't do it, but let's focus on why you can't do it. And if you can make these adjustments, we'll let you do the deal, whatever the deal happens to be. So more accommodative, right? And it's really helping get these M&A deals done. And as we get closer to November, the companies that are trying to get them done, they'll really start pushing it because that seems to be the deadline, if you want to get it done this year, you got to get your paperwork in by X period of time. So we're likely to see a lot more M&A deals before November gets here. Fifty 57,000 in the overnight for the volume seems okay, right? I'm not a big fan of the government taking a position in any company, but look at all the military side of things like Raytheon and Boeing, and then look at the housing side of things. I mean, is it really fair that they got involved with Freddie Mae and Mac? And I don't know, it to me it's just not good, right? I'm in the free enterprise camp. Government needs to stay out of our schools, and they need to stay out of our businesses. There you go. But I have been calling NVIDIA as along since it's got a sugar daddy, even before it finally went through. You know, if they're gonna provide Intel with a government put, then go along in Intel. I'll trade it. I don't have to like it. Volume today, same as yesterday. It's in the 50s. It's fine. We're holding within this range and zone. Still have the levels marked out from yesterday, that half back, 64.30. It's the line in the sand I didn't want to see crossed. We got to it without crossing it. Certainly didn't close below it. It's still on the table today. It's on the table for the week. We want to hold that line. We do not want to close below. If we do close below and it's close, it's fine, right? If we just really show a desire to get back above, or an effort to get back above, that's one thing. We don't want to see it close below and continue to drive lower, breaking the 20, getting back to the open from Friday. We don't want those sort of behaviors. Otherwise, we're fine. We're holding the line. We're doing what we should, and we're waiting on data. And it's all going to be NVIDIA, right? At the end of the day, nothing else matters right now but NVIDIA. And I was talking to somebody yesterday, not on anything really. By the time I got back, we were close to the low. And so it was an easy call to spot, hey, we're back to the low. That's why I like trading those simple trades. We have broke 64.50. We're underneath it. I've pointed out for a while now that the zones that they've been playing were front running that 50. They were at 54 and they were at 46. And that's this tiny little range that we have this morning. We'll see the bigger range out on the weekly, but this is the zone that we're in, right? And as usual, GTFO, you've got to get out of this box. It's the first box that we have to deal with. It's our Globex range. To the downside, we've got the lower ADR. To the upside, we've got yesterday's trading range, and then we've got the upper ADR if we can get a break out of yesterday's range, right? And we do have that little tail way up here. Oh, and it's right on the line. So yesterday's high is the ADR half. 64.92 cog line will be more relevant than that 64.94 level, but we'll see. And it also happens to really be Friday's high when we just start putting all the pieces together. So triple level of resistance up there, ADR half, Friday's high, Monday's high. We can get through it, but we would need something really juicy to do it. And we're not expected to get anything until NVIDIA. So there's no reason to expect that we'll make it through that level. That sets us up for some pretty easy plays, right? You could sell some calls up there. You could sell them in the ES. Obviously, you got 0-day options in the ES, and you can close them in the overnight too. You don't have to wait until tomorrow's trading session RTH. You can open them today and close them tomorrow at like 4 a.m. if you want to. Doesn't matter. But you can also do like some SPX short calls up there, like a short call vertical or something like that. I wouldn't put a butterfly up there because we're not expecting it to go back up. Maybe a broken wing fly or a ratio to fly, something like that. could do bat ears or double diagonal, double calendar. I think that's just a little more fancy than we need. Plus, the the way that those work best is when you've separated the time frames enough that the differential between the two contracts makes it worth your while. We've got one day today, and then then tomorrow, and then we're done, and we're going to be getting NVIDIA's stuff. So calendar and diagonal just really doesn't make sense. Short vertical up there does make sense because there's no reason to believe we're going to cross that line until at least tomorrow after the close if NVIDIA reports really well. So if you can time it today and we get some sort of test of this Globex high in the RTH, or if we can test yesterday's high in the RTH, get as close to that price level as you can before you put on the short call vertical so that you can get the most money in credit, right? You don't want to put it on when it's way out of the money. At least I don't want to put it. I don't like that kind of trade. If we break the downside, we got the ADR half, and below that, we got the full ADR 63.92 cog line way down there, which would still be inside of Friday's range. And that means it's on the table. Staying inside of Friday's range is the base case argument until we get NVIDIA's earnings. All we got to do is stay inside of Friday's range. My added little caveat is that we need to stay above that halfback, 64, whatever it was, 64.30. And so far, we're doing that. We tested it, but we're still above it for now. That's basically our Globex low. So if we give up 64.32 cog line to Globex low, it's kind of came on to the downside, still staying inside Friday's levels. The ADR at this point is really narrow. It's 68 points. If we was to go back a year ago, it was running at like 120. Right? So it's been cut in half basically from where it was, and it's continuing to shrink. So while these days may seem very violent or volatile, they are nothing compared to what we had, and the volatility continues to come out of the market. The thing about that Jackson Hole event, everybody's been waiting for him to cut because they had moved us into quote restrictive territory, right? We were above the mean or the neutral line, which is some hypothetical level that they can't even define in the first place, but they moved us above the neutral rate. And they did that because of inflation, blah, blah, blah. And they had given us some normalizing cuts. And then Trump got elected, started throwing tariff talk around, and they stopped the normalative cuts because they said his actions threatened to increase the all the violence again, right? And bring rates up, inflation up. So they stopped. But what he was talking about on Friday wasn't normalizing cuts, right? He was talking about preemptive cuts based on jobs. That's two different things, right? The market exploded on this behavior because he's going to cut. Yay, boom. But I think the market's starting to digest this and look at it from a different point of view. Wait, if we're getting a cut in September, it's not because of normalization, but because they're seeing weakness in the broader market. And of course, that signals an economic slowdown, stagflation, recession, blah, 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 right? And they would be trying to cut to stave that off or to get ahead of it. Those are two completely different kind of cuts. So sure, we did get the big move Friday. The market loved it, but the reason for the cut is different. And the fact that he's even willing to entertain it shows that there's some weakness out there that has the Fed concerned enough that they're talking about cutting, even though they know it's likely to cause inflation. And he changed his inflation targets. It's no longer 2%. It's been 2% forever. They gave up on that. So, when we get done with NVIDIA and the market, it starts to reconsider the things that Powell had said on Friday, NVIDIA just better be really, really good. right? How about that? It just better be really, really good. All right, so we talked about the channel on the week yesterday and the floor pivot overlap with yesterday. We're still inside of that channel pivot, whether you look at the daily or the weekly, it doesn't matter. We're still inside the channel. Today's floor pivot is higher than yesterday. That's bullish. Price opened underneath it. That's bearish. They kind of cancel each other out. But right now we have an MDP. That's a missed daily pivot because we never hit that pivot, right? It's up here. We haven't hit it. If you look at yesterday, we didn't hit that one either. That's a missed daily pivot. The problem is these are two entirely different missed daily pivots. Yesterday, we stayed above it all day. We never hit it. This morning, so far, we're underneath it. We haven't hit it. What we would want to see today is an expectation of normalization. How's that for some tongue twisting talk first thing in the morning? We want to hit that pivot. We want to end this count of the missed daily pivots, especially since they're going in opposite directions. So 64, 69, just jumping up there, getting it tagged and out of the way makes perfect sense. Otherwise, we're trapped inside of our own Globex range, which happens to be the channel on the weekly. And until we get out of that, we don't have anything else. The sad thing is, I don't think we're going to get out of it. I think we're going to wait on it for NVIDIA. Unless, and I keep coming back to this unless, because there has been precedent throughout history where the whole market is waiting on something and it just gets tired of waiting, or something triggers it. And in that low volume environment, it just rips up, down. I'm not giving a directional bias. It just goes. And it goes because of the lack of liquidity, and it just goes. So, yeah, base case argument, we're going to hold the line, but watch out if we don't, right? That, I guess that there's just no better way to say it. We better hold the line or else. So with the or else, I guess we go ahead and add some S&R lines to that. We're still trying to normalize them after that big move. Oh, no, they're normalized already. So because of Friday's big move, yesterday had really big bands, right? You can kind of see the difference between Friday's bands, today's bands. Yesterday's bands were really wide because Friday made big moves. I mean, look how big that range is. But we're done with that already, and we've got a more normalized range again. So we're resting on S1, crossed through it multiple times, didn't quite get to S2. The fact that we're above S1 puts the floor pivot on the table, and it puts R2 on the table, really, but more likely R1. So if we overshoot the pivot point, then look to tag yesterday's high, which we already knew that, right? Because that's the ADR line. But now we know that it's not just the ADR line. It's Friday's levels, Monday's levels, ADR line, and it's the R1. It's 4 levels of resistance, not 3 levels that we thought it was. I mean, what's 4 levels of resistance, right? It's all good. Yeah, that phrase throughout history has always been a punchline. What could go wrong? We're with the government and we're here to help. Yeah. You could probably go back to Saturday Night Live from the 80s if it was running back then. I have no idea. And they would probably still have punchlines of that from way back then. Oh, that's old. We are building out the normal distribution over our head from Monday. We'll see if we can bring that down. So far, no. So all the work that we put in here. Oh, come on now. I resemble that remark. It's because you're old. We've been down in this lower level nearly as long as we were in this upper level, and we have none of the work, right? All that work is still sitting up there well above 64.50. The value area hasn't adjusted. The point of control certainly hasn't moved, and we've got nothing down here. So we want to keep our eye on it to see if we can bring that down. Otherwise, it's lined up really nice with the previous 2 weeks. This is just a massive level up here, and they have been defending it well. Doesn't look like they're done yet. The shallow area, on the other hand, has been a bit of a surprise. We landed on something, right? Now, you could say that we landed on this lower shelf. No argument out of me, but it's very likely that an inverse market hit a resistance level, or a correlated market hit a support level, or if we go out to a weekly or a monthly, that the market bounced on a structure here, that it has nothing to do with the volume that we're looking at all. But it is there. It is a structure. We did tag it. And it is a cog line, 6432. But the shallow area did nothing for us, right? After all the times that we had moved through that shallow area repeatedly, really swiftly, without any sort of hiccup, yesterday, that's where we got hung up and stalled. $10-day, 30-minute volume profile and TPO, they're still kind of lined up really well. I think the TPO is representing a better distribution, but we're not expecting to see any significant change here, right? The candles that we're losing on the left have already been refilled, I guess is a good enough word, with these candles here. So until we start wiping these out, we're not going to see a narrowing of this structure. What we had been anticipating was that once we lost that lower structure, everything would tighten up. But because of what we put in last Wednesday and Thursday into Friday morning, we've now, reinvigorated that low, and until it's gone, it's there. Question is, what's going to happen with the point of control? I find it very unlikely that it will end up moving down here into that 6,400 or 6,390 area. But at the moment, that is the next highest level zone, 6,392 cog line. So by the middle of next week, we'll start wiping these candles out across the high. That'll move this point of control, unless we go back up there again, right? We get back up in there, then we could refill that level. And we're just playing ping pong here between going across the high and across the low, and then back across the high and back across the low, building out those levels with a space of about every other week. We haven't been able to get through there yet. All right, well, that VPOC got taken off the table. Could have already been gone. I think I left it on there for some reason. It shouldn't have been. It's done. But we'll just take the line and bring it over here, because yesterday gave us a new VPOC line. I don't put this thing to the tick. Really, I just don't care. I go to the nearest point, which seems to be 71. You do you. If you want to zoom in to the tiniest micro point and get it right on the line, have at it. Otherwise, 64.71 is good enough. That's the VPOC that we got from yesterday, and that very tight distribution is exactly what we're expecting again today. So if you liked yesterday's trading, well, stick around. Should get another opportunity to do it again today. It's not to say that yesterday didn't give us anything. Really nice reversals off of the Globex pivot point, and then a fantastic breakdown when we got back to the low of the day. Problem was what time of day we got there, and anybody's trading rules about trading in the power hour might have limited them from taking advantage of that. But still, there was tradable opportunity yesterday, and it's likely that today will get uglier than yesterday. Yesterday was actually moving from one point to the other, more of a range day. Today is very likely going to be more of a sideways day. Those look the same when you look back, but they are two completely different kind of trading days. Range day and sideways days are entirely different. It's like saying a golf cart and a Porsche are the same, because they both have 4 tires and a gas pedal. No, not really, right? No, they're not. Not even close to being the same. The week's range continues. We haven't made it to the bottom yet. Gray line is Friday's close. At the moment, I would expect that to continue to be the level of resistance over our head as a front run to the levels that we had already given, right? There's 4 levels of resistance up there. 5 if you want to count Friday's close as a level. We still have not moved too far, too fast, and it doesn't owe us any sort of a pullback or mean reversion, which makes sense because for the last day and a half now, since Friday's close, we've just been digesting Friday's move. So, no, we still haven't moved too far, too fast. We're still healthy and digesting and sitting in a good place, and there's nothing wrong here. The trend in the longer term is still intact, and it ain't broke, don't fix it. Looks like we got a breakout in energy in China. And yesterday we had quite a bit of breakouts. China, energy, banks, KRE. Bitcoin down again this morning. And energy, but not enough, right? Energy needs to go down more before we can consider it this morning. The VIX is up. China, precious metals, or at least the miners. The UFO stocks are up. So small caps getting a little bit of love there. China again, and a lot of these others are China too, just not enough. Chips are up a little bit, but they got to get some work done. Airlines getting a little bit of attention. Keep your eye on communications today. There's a deal that was announced for AT&T and some other little Joe Schmo company, and both of those companies were up. AT&T was like 1.5%, 1.25%. The other company, the little penny stock, low float trash company that it bought, was up last I saw like 70%, something like that. Massive move. EchoStar, yeah, that sounds about right. AT&T spreading its hold a little bit. You know, I live in the BFE nowhere of Kansas, and there is no coverage. I can literally be in one of the bigger cities of Kansas, Salina. It's not much bigger, right? We're talking about like maybe 100,000 people, and I have no coverage, like none. Sitting at a stoplight in front of Walmart and 100,000 town people, no coverage. And it doesn't matter if it's Verizon, AT&T, it doesn't matter who you have. There's just nothing here. So I don't like any of them. I think they're all trash. I just need to get a satellite phone and call it good. It might be worth digging into UFO today, especially if we don't get anything else going. I'm going to just put 2 cans together, right? Get some string, build a smokestack in the Walmart parking lot, send smoke signals. If I'm looking to day trade today and the indexes stay sideways, I would open up the ETF for UFO, see what stocks inside that ETF are making moves, and likely focus on those for a day tradable opportunity. Airlines are up a little bit this morning, not enough. Otherwise, we got nothing, right? And that's kind of what we expected. We're not expecting anything because we're not supposed to do anything because we're waiting on NVIDIA. Pot stocks, China, miners, airlines. Well, airlines need work. You don't want a rally day on pot stock. That's just not good. Aren't they still worrying about radiating people if you get one of those cell towers on your land? I mean, I don't know. Don't you end up with like cancers and tumors? But I guess if you own enough land and keep it away from the house. Oh, only 5G in Europe. Kansas, we're a spread out community. So I know, right? Putting that cell phone to your ear all day. That's why I'm glad I work from home in my office. That phone is really, it's on my desk 9 hours out of 10. I don't even touch it. Crude is down. Solar is down, which is a little odd. Usually solar's running with China, and it's just not. Bitcoin, energy, Mag 7. So we want to see those Mag 7s normalize, especially with NVIDIA being in that group. We don't want to see a breakdown, right? We just we want to hold the line. In this really low volume environment, it wouldn't take much. It's like a really, really dry forest just waiting for a spark to get a forest fire. We don't want to see the herd run, right? So let's just hope we can tiptoe through the day without lighting any fires. We can hope. Otherwise, I think it's gonna I think it's gonna get really nasty really fast. Well, the if we did break, you would instinctively think it's going to go down, right? I don't think so. If it doesn't have to go down, it could go and try to continue that Friday move for all we know. The thing is, we're supposed to be waiting on Nvidia, and if we stop waiting on Nvidia for whatever reason, and the market wants to front run, say pull forward the recession risks that Powell gave us Friday, they could dump it on its head. But on the other side of that, if they still think that everything's great and jolly and they want to continue this rip to the upside, we could see 65.50 today. Easy. 100-point move would be nothing in a low volume environment like this. So I hope I didn't sound too bearish when I was saying, that all it takes is a fire and we could go, because I think it could go either way. In a low volume environment like this, the trigger could be bullish or bearish. The bias could take us in any direction, and there really wouldn't be anything to slow it down, other than the dealers that everybody hates or that everybody loves to hate. They would be the only ones that would be there to sell into that strength and try to slow it down to the upside, or buy into it as it fell. And will they? Do they even need to? Right? They should be as balanced as it can get with yesterday. They shouldn't have any need to adjust their portfolios on the move. So everybody be careful, be safe, keep your eye on the headlines, look for any reason that we don't hold the line, and otherwise expect to hold the line. I'll see you guys tomorrow.